You're listening to the All-Star Charts podcast with JC Peretz on technicalanalysisradio.com.
All right, everybody, we are back with the founder of a new favorite tool of mine, Koyfin. Rob Koyfman, thanks for being on the show.
Thanks for having me, JC. Really excited to be on.
I love getting to know Koyfin more and more every time I use it. Sometimes I catch myself emailing you, be like, hey, it would be really cool if you had this. And then I catch myself not having dug deep enough to actually find what I was looking for. And then I email you back, be like, yeah, never mind, I found it.
We have a lot of stuff on our system, so definitely takes a while to find everything.
All right, so I've been using it for a while, but why don't you tell the audience a little bit about what Koyfin is, why you started it, and what makes it stand out from the rest?
Cool, yeah, so Koyfin is a data and analytics platform. It's basically meant to help investors make better investment decisions, really understand what's going on in the market. So it's a tool that brings together a bunch of interesting data. That's kind of the first value proposition of ours. Not only do we have stock equity data, but we have really high quality fundamentals. We have macro instruments like commodities, econ data, FX, and a bunch of other data. So we're constantly adding more and more data sources to our system. The second value proposition is we provide the analytics to analyze that data. So I'd say a lot of old school analytics platforms on Wall Street, they give you the data, but they don't really give you the tools to analyze that data. So we've built all our charting in-house, all our dashboarding tools, all our portfolio tools. And so that's the second layer of the value add that we provide. And the third layer, which I'm most proud of, is really the user interface, is really focusing on a really clean and intuitive user interface that isn't too clunky, that isn't from the 1980s, like a lot of other systems that were built in the 1980s, brings kind of that modern UI, UX feel to it. So that's kind of Koyfin value proposition in a nutshell. Why did I start this? Well, I was on Wall Street for a very long time, for 15 years in various jobs. My last job was at a hedge fund. I left the hedge fund to start to do something else. I started trading on my own, started to put together a research product for other people just to keep my ideas fresh. And when I started to do that and started building the resources to do that, I was kind of quickly faced with this challenge of almost required to buy a Bloomberg or get a Bloomberg subscription, or else I couldn't get the data and I couldn't get the stuff I needed to trade and to put out research. And the more I studied and tried to find new tools out there to supplement or to replace kind of that core Bloomberg that I knew from my career, the more I realized there's a huge opportunity in this market. This market for a long time has been very bifurcated in terms of very premium tools like Bloomberg on one side, which are super expensive, but also clunky and difficult to use. And then on the other side, the free tools like Yahoo Finance and Google Finance, some of the other free tools, they just don't provide a lot of analysis and a lot of data. And there's nothing really that I thought was very functional that sits in the middle. And so that's kind of what we're the value add, or where we're trying to provide value is sort of in that middle tier of having a lot of functionality, having a lot of data, but the price point being significantly less than Bloomberg or some of the other competitors.
I'll tell you what, as soon as you start using the product, I mean, the user interface, it just pops. It's so easy to use. Like you said, there's a ton of data, but also the tools to be able to analyze that data, there's no question. And one thing that's really interesting, because I talk to, obviously I look at a lot of charts, we build a lot of charts. I'm friends with a lot of, people who build charts, right? And I still have yet to meet a single person that is not like, whoa, Koyfin is awesome. Like everybody I talk to is like, wow, this is really the coolest new tool that we have sort of at our disposal. What sort of, feel free to tell it like it is. What sort of feedback are you getting? It's got to be similar to what I'm hearing.
Yeah, thank you for saying that. I appreciate that. So look, the feedback is really positive, both kind of like subjectively in terms of what people tell us, but also kind of from the data that we see in terms of our user base, very sticky user base of people that come on our platform, stay on our platform, really high engagement. The average user uses our platform for sort of 1 to 2 hours per day, which is obviously very high for a website or for a analytics platform, meaning that it's a primary tool for a lot of people in terms of following the market. I'd say, the challenge for us is we're getting so much feedback from so many different people. And when I say people, groups of people. So right now our product is free. So anyone could use it. Anyone could just go to the website, sign up with their name and email and just start using it for free. And we have so many groups of people. So we have like the technical people, which are requesting more and more technical functionality. We have, yeah, I don't know, I can't name any right now, but so we have kind of like that cohort, and we could go into kind of like what we're going to introduce for all you lovely technical people out there. We have the fundamental people who are like stock jockeys and really tell us like more the fundamental data that we need in our system. We have the financial advisor community, which really asking us for a lot of model portfolio and portfolio analytics and mutual fund and ETF functionality. And then the last group I'd say is the macro people. So it's kind of the people who care about econ and all the macro instruments out there, and probably related to the technical people, but a little more focused maybe on the macro fundamentals rather than the technical. So those are the four groups. It's very challenging for us to prioritize the feature requests, and we really kind of have to think about what's going to make the most impact on our user base, and also what isn't really offered by other systems, right? So when technical people come to us and say, hey, like your MACD just needs to be better, my pushback to them was like, look, like MACD you could get on TradingView, you could get on stockcharts.com. There's a lot of great technical analysis websites that sort of do basic technicals, but we've had so much feedback from the technical community. The last several months has actually been spent on improving our technicals, and depending on when this episode airs, we have a huge upgrade to our charting coming out, which has been a little bit delayed, but basically offering a lot more technical ability to our users to customize those technicals, to really be able to save templates, technical templates. So we've really kind of listened to our users and really introducing that, and really thinking about how we can be better than some of the charting platforms out there that already offer some basic technicals and some calculations.
I think what you're doing is really smart in terms of, sure, you're pleasing us technical guys, and we're always, Bruni and I are always sending you emails like, hey, this and this, sharing ideas. Obviously, we'll always do that, happy to. But you are really going out of your way to appeal to the fundamental community and the CFA community, and I'm noticing that perhaps other charting softwares are maybe ignoring that. So I know like this is a technical analysis podcast and everything like that, but I'm really curious as to the demand coming from the fundamental community to visualize their data.
Yeah, and at the end of the day, I believe that the reason that there's kind of this rivalry between technicals and fundamentals isn't because the two are that much different. It's because the two don't have a common language or a common way to explore each other. So I think the technical community is kind of, they know their tools, they understand what they do very well, but accessing fundamentals and looking at fundamentals is challenging because they were never trained that way. So what I think a lot of technical people think about fundamentals, it's like, oh, I have to build a spreadsheet of like a cash flow statement, and I'm not an accountant, so why am I going to do that? And so our not pushback, but our answer to that is, let's make fundamentals just much more accessible, right? So there's just like in technical analysis or any discipline, I'd say 80% of the value of that field is probably with 20% of the learning involved, as long as you can make that learning easy and accessible. So even if you're a technical person, I want to offer you the ability to graph simple fundamentals like revenue or net income or valuation ratios, and marry that with your fundamental framework to arrive at marry that with your technical framework to arrive at a better answer than if you use technicals by itself. Because fundamentals do provide value, it's just a different way of looking at a stock or a different way of looking at the market. But there is value in fundamentals as long as you sort of know what you're looking for. And I actually did a podcast, a webinar with the CMT organization talking about some basic fundamental analysis that technicians can use, and that's available on our YouTube channel. And I just went over kind of some basic things like looking at valuation and how to think about valuation being at extremes, and then using technicals as really a way to narrow down a catalyst on when to put on a trade, so having the fundamentals inform you, and then the technicals really giving you that confidence to pile on a trade. So marrying the two disciplines.
All right, so I don't want this to take over the entire podcast, but we want to give the audience the opportunity. Oh, you knew it was coming. You knew it was coming. So we want to give the audience the opportunity to sort of eavesdrop on this ongoing argument, discussion, whatever you want to call it, that you and I constantly have when we get together. And it's been going on and it's still not resolved. But essentially the question is whether when we're doing technical analysis specifically and trying to understand the behavior of supply and demand, do we want price-only charts, or do we want to adjust our charts for dividends? And I am a purist when it comes to price, and you like to make the argument that we need to look at total returns and include those dividends when we're doing our technical analysis. Do I have that correct?
Slightly. I think the way you frame it is a little bit of a baited question. So I wouldn't call you a purist. I would call myself a purist. So that's one kind of pushback on the way you frame that. But I would agree with the general premise.
So the way I see it, the way I've learned from it, from my predecessors, the way I've done it my entire career, and I've looked at it both ways, and I've come to the conclusion that price only is the approach that we want to take when we're analyzing supply and demand, because we as human beings, which is what we're studying, right? We're studying the supply and demand dynamics that is driven by human nature and our emotions. We remember the price that we paid for the stock, not how much money we have made if you include dividends. So my argument is, if your goal is to analyze supply and demand using technical analysis, we want to be looking at price only. If you're trying to show what the total return might be for portfolio purposes or something like that, then I can see the value in dividend adjusted charts, right? But for technical analysis, it's price only. Tell me I'm wrong.
So first of all, I don't think you're wrong or right, even though I think you're wrong. So look, I think there's a lot of people that have an opinion on this. At the end of the day, like, as you know, investing is a art rather than a science. So it's kind of a matter of preference. I would agree with several things you said there, and then I disagree with a bunch of other things that you said. So adjusting for dividends. So let me start with the fact that I used to be in your camp. I used to think that unadjusted prices is the correct way, or the way that I looked at technicals for a long time. And I always thought, like, look, like, why artificially add back a dividend when the price is just, the price chart is the price chart. But then I understood the mechanism of how a dividend is paid, and that is what changed my mind. And I think most people who just use price returns and don't adjust for dividends don't really understand the mechanics of when a dividend is paid and what happens to a stock. So when when you said, humans, we're trying to study supply and demand, and people remember what they paid. That's absolutely true. But you got to remember that technical analysis is all about taking today's price and then comparing it versus history. And history isn't written in stone. Like, we, as technical analysts, we do agree on some things that should change the history. And that's kind of like an overwhelming agreement. So for example, when a stock splits, we all agree that, hey, we should take the historical price and actually adjust it for that split. We don't show that big gap, 50%
But
down
Rob,
gap.
nothing changes on a split. Zero, nothing has changed price-wise. Nothing. They're just twice the amount of shares or half the amount of shares, whichever way the split goes.
So you're absolutely wrong on nothing changes on the price. On the price, the price is actually 50% if it's a 2-to-1 split. The price is actually 50% below where it traded yesterday.
But you have twice as many shares or half as many shares, whichever way it goes. The supply and demand dynamics are not affected by that whatsoever. Nothing has changed.
What's correct? So you're absolutely right. So the reason we adjust it is because nothing's changed. So even though the price falls by 50%, you get in your account double the shares. So nothing has changed. Now, if we kind of like shift to a dividend, when a company announces a dividend, so let's say assume a stock is trading at $100, a company announces a $10 dividend. On the X date of the dividend, the stock price goes down by $10 automatically. That's not a market supply demand force. It automatically goes down by $10. And so from my perspective, what a technician should say is actually nothing has changed because the price went down by $10, except I got $10 in my bank account from a dividend. So I should actually adjust the price. And that's exactly what happens in a stock split, right? You get the shares in your account, so you adjust the actual price we show on a chart by an offsetting amount. And that's my argument of why you should adjust a dividend, is because that's actually a payment that's being paid to you in your account. And that stock drop on the X dividend date, which happens automatically, that's not a market price, that's an automatic decline, needs to be adjusted for. And I think what most people miss when they only use price returns, they miss that the fact on the X dividend date, the actual price goes down automatically by that amount. Now that decline is usually very small. It's usually like 25 bips or 50% or 1% in terms of yield. And that's why the quote unquote purists, I think, fail to kind of like see that you should be adjusting for that. But if you kind of think about it, it's the same thing that happens during a corporate action, whether a company pays you a dividend or a company splits a stock or a company dividends out a share. There are dividends which are comprised of stock shares. So if that happens, you should adjust the chart historically as well. So that's why I believe that when a company pays a dividend, you should go back in history and adjust the stock price based on that dividend payment to offset that dividend payment.
Well, I remain in the camp that if we're studying supply and demand, Rob, and I love you, if we're studying supply and demand, it needs to be price only, because I'm in the camp and a lot of my fellow colleagues are in the camp that we remember the prices that we paid, and a lot of these algorithms and a lot of the trading that takes place is not for a total return like perhaps a long only mutual fund or maybe some of these ETFs, but for speculation, and are trying to take advantage of these supply and demand dynamics. So I'm going to put out a blog post shortly. I actually polled a group of the smartest technicians that I know all over the world, and I have a list of answers, and we're going to go ahead and publish those. So if you'd like to add to this conversation, I encourage you, tweet me at All-Star Charts, and you can also tweet Rob, include him on the tweet at Koyfman. So he's at Koyfman on Twitter, and please join the conversation. I'd love to hear your thoughts. But for the sake of everyone's sanity, and especially our listeners,
can I just add that if you could please tweet and tag our corporate handle, which is at Koyfin Charts, Koyfin Charts. Thank you.
And we'll just keep the conversation going because I love it, and that's really what this is all about. I think you nailed it when you said, this isn't a science, this is more of an art. There's no wrong way to make money. We all have our different disciplines, and I have these discussions with friends of mine all the time about a variety of all sorts of different stuff. My closest, smartest friends in the business make fun of me because I use Fibonacci, and I make fun of them for not. It's just, it is what it is. So why don't you tell me something? Why don't you tell me about the new tools that we're going to have? You said you've been working on a lot of things for technicians. That's going to come out on the new version.
Yeah. So we've been, basically when we started Koyfin, it was obviously any project is a work in progress. And what happened was we basically had different templates or different modules depending on what chart you wanted to look at. So for example, if you wanted to look at a price chart, that was one module. If you wanted to look at a correlation chart, that was another module. If you want to look at a fundamental chart, so look at graphing fundamentals, that was another module. So kind of like different modules depending on what you wanted to look at. And what we did is we basically combined everything into one and are making our charts just super flexible so that you can graph anything without having to think, oh, where do I go or which chart do I use? So that's kind of like the first thing is we simplified everything by combining everything. That's a big value add. And then the second thing we did, which is really interesting, is introduce this concept of templates. So you could create a template, for example, of price, relative performance, correlation, and revenue, and save that as template one, and then use that template for any ticker going forward. So this concept of being able to build a template and using it for any sort of ticker going forward as well. The other thing we did was we just added a bunch of new data. So JC, this is something that you and I have discussed before, being able to look at analyst ratings as a sign of positioning. So we've, in this latest chart upgrade, we're going to have the analyst price target, the percentage above or below the analyst price target, and then actually the analyst average rating between 1 and 5. So kind of see where Wall Street is positioned, or where sell side opinion is positioned relative to the stock price.
Are we going to be able to filter through like the most bearish positioning for Wall Street versus the most bullish? Can we filter like that?
Yeah, so you can right now by, we have this tool called My Dashboards, which you can basically populate with a list of stocks, and then you can sort that list however you want. So I think what you're asking is more of like a screening tool, which we haven't built yet, but that's on our roadmap as well. So there are ways to filter or to sort a universe of stocks. So for example, if you have the Russell 1000 ETF, you'll be able to just sort it by analyst rating or number of cells or whatever it is. But we don't have a function right now where you can actually create like a screening tool, a traditional screening tool, or I guess some systems call it a scanning tool, which is in the works as well, which we're gonna release later on this year.
Yeah, because I'd love to be able to, because one of the things I love to see is when a stock's making new 52-week highs and Wall Street's super bearish, right? And you got that fuel to unwind it, while all these guys are chasing new 52-week highs and having to upgrade their targets and all that stuff, right? When stock makes a new 52-week high and the analysts takes it from a sell to a hold as it goes to make new 52-week highs. Like I would love to be able to filter the stocks making new highs or making new 6-month highs or whatever it is, and be able to include and have that with the lowest analyst ratings, right? Like something like that would be really cool, right?
Yeah, absolutely. I think when we create that screening tool and just give people the flexibility to filter on or screen by any metric, I think it becomes really popular. It's really powerful. And I love kind of the particular screen that you're talking about, which is, hey, the market is saying one thing, meaning the stock is hitting an all-time high. Wall Street is way behind for whatever reason, whether they haven't caught up yet or they're just bearish for some other kind of structural reason. And that creates just a lot more buying opportunity. So I think my favorite is kind of the way you described it with analyst ratings. Another one is with short interest, right? When there's high short interest and a stock is hitting new highs and you're like, wow, I can't believe people are still bearish on this name. I want to continue to be buying it. And those are some of the best setups, I think in the market. But I think that screening tool will really allow you to hone in and really refine these metrics and characteristics of what you're looking for, these setups.
Now, let me ask you this. An interesting conversation that has kind of just been ongoing that I've noticed a lot more recently is the argument that, our predecessors, particularly in the technical community, our predecessors had a certain amount of tools and a certain amount of computing power to be able to analyze the markets, right? And they essentially took our industry as far as they can, and they essentially handed the baton over to our generation, and our generation now has access to so much more computing power and tools that we're seeing sort of an acceleration of new ways to analyze things, new ways to look at volume and new ways to look at candlesticks and, the power of the volume weighted average price. And we're seeing the VWAP being able to be used more and more every day, not just in the institutional level, but for really any investor, and just new things that just Edwards and McGee and Charles Dow 100 years ago just simply did not have. So you have really a front row seat to this sort of revolution in technology, particularly for technical analysts. Can you tell me a little bit about sort of what you're seeing, what sort of participation you have there, and what you're seeing others do as well?
Yeah, I think that's a really interesting question, and has so many different dimensions to it. So, let me just basically try to hit on a couple of points that you said. One is, I think in terms of an investment framework or understanding why something will go up and go down is the same today as it was 100 years ago. Mm-hmm. And I think from a technical perspective, momentum worked 100 years ago and momentum works today. And it's a super interesting question of why momentum works, but the undeniable evidence is that momentum is one of the most powerful factors, or is the most powerful backward-looking factor that we know about. Yeah. And I've always thought about, and I've never really had a good answer of why momentum works, both on the upside and downside and across asset classes. And I've seen all the papers written by kind of like AQR, which is a leader in this field. But I still don't really understand, or no one has really explained to me why a market of a bunch of dumb people together is very smart, and why kind of like market forces work when it's comprised of a bunch of dumb people that are trading against each other. And that's a super fascinating question. But all I know is that momentum works, and technical analysis is built off of momentum, or the changes in momentum. And so it worked 100 years ago, it will work today. And same thing for fundamental analysis. I think fundamental analysis, both today and 100 years ago, is all about predicting the future. I think the mistake fundamental analysts or people who don't understand fundamental analysis, they'll look at a number, a historical revenue number or margin number, and they'll try to make some kind of trade based off of that. Whereas fundamentals work because a good fundamental analyst will predict fundamentals, and that's the key for fundamental analysis. Is you have to have a projection, and the reason you use historical fundamentals is it's a base for your projection. But the historical fundamentals don't impact the stock price. That's kind of been proven over and over and over again, except valuation. We'll put that aside. So those kind of two central forces, those kind of like two central pillars of investing, technical analysis or fundamental analysis, hasn't changed in 100 years, and I don't think will change over the next 100 years. Now, what will change, as you mentioned, is kind of our access to computing power and our ability to just process data. And I think what computing power will allow us to do is really set up frameworks to be able to identify opportunities and to be able to be alerted and research opportunities. But I think at the end of the day, the two opportunities of technical analysis, which is kind of identifying momentum or turns in momentum, and fundamental analysis, which is being able to predict fundamentals for a particular stock, or interesting opportunities, fundamental opportunities for a particular stock, that's not going to change. Does that make sense?
Yeah, no, 100%. I mean, I just, for me, I mean, you're literally getting access to the technical community, the fundamental community, the global macro community, right? You're seeing all of these different, and from all walks of life, correct me if I'm wrong, from, younger up and comers to, seasoned veterans are using these tools, right? You're getting so much feedback. I can only imagine how much you're learning throughout the process.
Yeah, so look, like, startup software is a whole new thing for me, right? I was kind of like a analyst, trader, strategist, and on Wall Street, and so doing this is a whole new learning experience. And one of the things that really resonates with me is I think people who have been in this job for a long time, so you and me who've been doing it for more than 10 years. I always forget how difficult it is in the beginning. I always forget, like, when you're new, this whole industry, all the language, all the nomenclature, all these ideas are just so foreign, and it takes a long time to be able to internalize and digest them. And so for us, like, one of the things that I really want to explore going forward is how do we create like a really cool educational system? Like, how do we, if you're a new investor, if you're in college, even if you're older and you're just like, I want to learn how to invest, how do we create this program or these how do we put together a curriculum or allow you to learn use our tools to really understand and start internalizing what it means to be an investor, what it means to do technical analysis or fundamental analysis or macro analysis. And that's something that we hear a lot from our users that have never used like a Bloomberg or a Reuters or a FactSet and are new to Koyfin, and sort of say like, hey, like, you have a lot of stuff on here, but I don't even know where to begin, and I don't know what 95% of the stuff means. And that's a really interesting avenue for us is how do you educate and allow people to get smarter about investing.
And where is this coming from? Are you seeing this mostly domestically in the United States? Are you seeing a lot of demand for this sort of thing in Europe or in Asia? Any areas that stand out?
Yeah, so it's interesting. Our international audience is about 40% of our users.
Wow.
And when so US and Canada is 60%. So sorry, fellow Canadians, I consider you domestic. And despite some of the rhetoric from other people, but it's a really interesting mix because our data right now for stocks at least is very domestic focused. We have international data for currencies and economics, but we are going to be expanding to international stocks and equities, and I think the opportunity for abroad is just really high for us, and especially in emerging markets where the growth rate of investing and investors is just so much higher than in the US. I think that's going to be a really, really big area of growth for us.
I couldn't agree more. I've been very fortunate, to have traveled throughout Asia multiple times, and throughout Europe and around the country, around the United States and Canada for that matter. And I mean, just every time I'm in a new city, meeting with new people, I'm just floored, with the demand from both sides, not just the technicians, but the fundamental guys, to be able to find new tools to help everybody visualize data. I mean, you're seeing it yourself.
Yeah, absolutely. And I forget the exact stat, but in terms of like CFA or CMT, and you look at the number of candidates taking the exam in China and India, and I think it's more than like all the charter holders combined in the world. So it's just tremendous growth and interest from outside, from other regions.
Yeah, there's no question. It's a beautiful thing. So before I let you run, you want to just for people out there who are not using Koyfin yet, or this is sort of like a new thing, what's your recommendation? How should they get started?
Yeah, so we're definitely desktop based. So desktop is the preferable way to use Koyfin. We have a mobile web which you can use on your phone's browser, but start on your desktop. Go to our website. We really made it easy to click around to browse Koyfin. So on the left-hand side, we have different cross-asset dashboards where you can see how sectors are performing, currencies are performing, countries are performing, commodities are performing. So really easy to kind of browse around and see what's going on. And then our most popular feature, our most used feature is called My Dashboards, which is where you create your own list of securities that you're following. And not only do you create that list, you're also picking the columns by which to analyze them on. So returns or fundamentals or positioning, you could set up any kind of column view there, and really then start thinking about your portfolio or your watch list in different ways. We, as I mentioned before, we want to have more educational material on our site on how to use our platform. But right now, it's sort of kind of like a trial and error for new users.
Well, Rob, I won't take up any more of your time. Go get back to building cool tools for me to use and make my life easier. And I really appreciate you doing this. Thanks a lot.
Thanks so much for having me on, JC.
Thank you for listening to the All-Star Charts podcast with JC Peretz on Technical Analysis Radio. To see all of the charts mentioned on today's show, please visit allstarcharts.com/podcast.